there could be a major breakout in the silver miners on the horizon. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Okay, so we do have the silver miners, and there's a 51% here gain from the 52-week low, but there has been a haircut. The technical setup is still very, very interesting though from a bullish perspective. So let's go here to the charts like that, and this is the Global X Silver Miners ETF. SIL is the ticker, and we have had time cycles that have been okay for some time. There's no perfect match, but there's a decent match here between price action and the time cycle. So here you have the major time cycle, and you have seasonality. You can see here that the time cycle peaks here around July. We do see that July and also August are rather strong for the silver ETF, the SLV. When we go here to the silver miners, you see that June, July, and August are very strong seasonally. Hence, even though there is this decline here on the time cycle, that starts around July, it is more likely that the actual decline in price will come late into the time cycle because of the very strong seasonal strength for both silver and the silver miners ETF. If we look here, you see that we are very close to a major breakout. You have resistance from back here in 2016, and then you have this tremendous cluster here of resistance levels. When we look at the RSI and the PPO, we have been higher in the past during major rallies. Hence, there is still a lot of fuel left here in the tank. When we go here to the daily data points, that's when it gets really interesting, because we do have this very interesting technical pattern called the rounding bottom. So it's been very nice in development. The thing about a rounding bottom is that it does have a jagged development. That is very common. That can be frustrating for some investors, but it just comes with the territory. Rounding bottoms, they do form in a jagged way, and that is exactly what we see here with the silver miners ETF. We are extremely close though to breaking out above a lot of very key resistance levels. And we have recently pulled back here to test the 20-day moving average in purple. So this rally, it has been very strategic. It hasn't been too aggressive. Hence, the RSI has avoided overbought levels. Because when we look at this ETF historically, high RSI usually doesn't work out. So even though a lot of people wanted to see a major breakout way before, months back, this actually is very good, because it's not, there's no point in doing these kinds of attempts. Like this is like a goofy attempt, this as well. There's no point in doing this. We want to have a sustainable breakout, and this combination now of a rather reasonable RSI, PPO is also looking okay. You do have the seasonality, you do have, to some extent also the time cycle that contributes to the potentiality here of a significant breakout. When we go to FinViz, you see that we have broken out above some key resistance. When we compare the silver miner ETF, the SIL, with the metals and mining ETF XME. When we look here at the price earnings ratio, you see that the XME is actually minus 36% below in terms of price earnings. But when you look at the dividend is substantially bigger here on the silver miners versus the XME ETF, the broader miners ETF. Looking here at the holdings, you can see the comparison So here, of course, you predominantly have silver miners. That doesn't mean that 100% of their business is from silver, though, because if they do find other valuable metals, of course, they are going to bring them out of the mine. But they do, of course, focus on silver. Here is the XME, which is much broader. So here you got steel, you got aluminum with Alcoa, you got copper and gold here with Freeport-McMoRan. Yeah, so just basically, a broader exposure to the whole mining space. Market cap breakdown, dominated by mid-caps actually here with the silver miners. Here's the region breakdown, country, Canada, huge when it comes to silver. While we are at it, let's actually have a bit of a look at silver. So let's go to SLV, because it's very relevant. So we see, a very similar technical pattern here on the SLV. We are so close here to a major breakout on. We do see that there are time cycles, but I did try to draw in the time cycles, and they have differed a bit in duration. That's something we did see to some extent on the silver miners as well. There were time cycles, but not really that perfect. But there clearly is this inhale, exhale development here. But then all of a sudden you have a bit of a larger one. We are, we are not at the beginning of this rising phase. But when you compare the current rising phase to some of the previous ones, this could be there could be not enough fuel left in terms of seasonality and the other technicals for this move to be the one that creates the breakout. Here are some important statistical correlations between the silver miners ETF and different instruments. So you have silver, a 96% positive correlation long term, but there's only actually a 69-ish positive shorter term, on the daily data points. When we go here to gold, 91% long term, but it drops down to 67% shorter term. When we go here to the dollar index, there's a minus 60% relationship long term. Shorter term, minus 57%. So not as, strong as people think. Looking at, the US 10-year yield, minus 68% negative long term, but there's virtually no correlation at all looking short term. So to sum up my take here on the silver miners, I do think that this is a very interesting long-term technical setup, and also fundamental setup that favors a breakout. Could it break down? Could the bears get back and destroy the move that we have seen so far? Of course, that is possible, but based on the current information we have with seasonality and the macro picture, you name it, it's way easier to make a bullish case here for the silver miners than a bearish one. The annoying thing about rounding bottoms, even when they happen, towards a high, they are jagged. Hence, it is possible that we will have another pullback before we have that final rally that triggers and that succeeds in breaking out above the resistance levels. The great thing, though, about these rounding bottom formations is that because of the very, very frequent pullbacks, we know the strength of the bears and also the strength of the bulls. So there's less, big surprises in these formations because price action has been so dynamic and active.